Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily NVIDIA report for Friday, August 1st, 2025. Let's take a look at the charts. Now, we've certainly stretched through the 177.41 channel top. We even violated it by a full 1% margin. Today is the day for buy signal clarity. Closing today at 179.18, 1% above that 177.41 2.5-year channel top, does indicate likely upward continuation over the next 2 to 3 months to the 219.64 full wave count. That is subtracting the January high, or subtracting the April low from the January high and then adding it back to the January high, the full swing. That would become our next objective. If that occurs, that is to say, closing today at 179.18 or higher. Closing below 177.41 maintains this area as sellable resistance. Despite the frustration that may have occurred this week, if you sold it, maybe you actually went long, over the last couple of days when we settled above the 177.69 formation, the same formation, but on the daily chart. And we did actually close above this formation by a hair on Thursday. We're still sort of in this wait and see. Today's an important day. And if we close at 179.18 or higher, we're in a buy signal. And in fact, you could make a case on the daily chart that just holding above 177.69 will still keep that 186.39 level in reach over the next few days. And so let's talk downside. We did put out a new all-time high, of course, on Thursday, and we closed negative on the day. And that is itself what I would call a mini reversal. It does, to a slight degree, skew into the bearish column. But we're at such a critical point, I hate to make any assumptions right now. I really want the market to tell me one way or the other, and I think it will today. If it closes at or above 179.18, buy signal. Without that, the rubber band is still stretching. And if you're short, even if we close today at 178 even, I think there's still a case to be made for staying short. And I'm talking really to swing traders who occupy the 3 to 5 week out to the 2 to 3 month time horizon. Because as I've been saying, without that settlement above 177.41 by a full 1% margin, we have the risk to the downside and the likelihood to the downside, I think, over the next several months of falling back into the upper 140s. Let's get back to the day itself. I want to present this chart. And so 171.89 is actually in reach today if we break or open below Thursday's low. We also have, there's a 176.88 level. Where are you? I do wind up losing. There it is. 176.88 is this channel bottom I've been talking about for the last couple of weeks. The one that we broke about 2 weeks ago, closed pretty much right at. Yesterday, we almost tested it. I do have it in the mix. It's just a minor point. I'm not comfortable with it as a downward pivot point at this stage because it is above the low of the high. The low of the high, 175.93, that was put out yesterday, Thursday, I think is our more reliable downward pivot point. Of course, if we break 175.93, we also violate this channel bottom at 176.88. So breaking 175.93, I do anticipate that 171.89 level, and that is a formation that may well contain daily selling pressures. I think there's a decent chance for that. So that's a solid day trade level.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
But if you put this all in context, we are testing now such a critical resistance area at 177.41 or 77.69 on the daily chart that if we were to fall away, if we were to just say, let's say we test 171.89 today, it holds and we sort of bounce modestly, we wind up closing below 175.93. The big picture is still then of bearish continuation over the next a full week or sooner to 167.32, over the next 3 to 5 weeks to 157.48. And that could be within 2 or 3 weeks. If we don't bounce meaningfully off of 167.32, I do think this 3-month channel bottom carries with it the possibility of continuing selling through next week. And from here, we can round back up into the upper 170s again within a full week, 2 at the most, of testing 167.32. But let's say over the next 3 to 5 days, we close below 167.32. We're just another 3 to 5 days away from testing 157.48. So you could call these bands, these channel bands, as solid a 3 to 5 day swing trade opportunities. And really the point I'm making here is we could see 157.48 sooner than the next 3 to 5 weeks if over the next 3 to 5 days we close below 167.32. Also, just know that if we do not close today above 177.41, I think you can play 157.48 as a 3 to 5 week target that may be realized, as I just said, within a couple of weeks if we over the next, 3 to 5 days close below 167.32. 157.48 is an area that should be respected for its ability to contain selling through the rest of August and into September. And from here we can round up once again into the upper 170s and climbing within 3 to 5 weeks of testing 157.48. But if you're looking at the big picture, I do think the upper 140s should not be discounted as a possible 2 to 3 month target, especially if we close today below 177.41. It is our next long-term support at 149.76. And there are other elements lining up with that we've yet to present on the daily chart that we will if we begin to fall away from here. Once again, let me just reiterate that if we settle today at or above 179.18, no good reason to hold a short position if you've been establishing one for the last week. It is time to exit a short position and consider reversing and playing the long side as we move into the fourth quarter, 219.64 in play. Inversely, let's say you've been buying the market the last couple of days as we pushed above 177.41 and closed above it, I think 2 days in a row. If you're now tentatively long, my suggestion is to certainly exit that long position if we close today below 177.41. In fact, if you've been playing the short side, there's so many different ways to view this. You might have been selling this, not only exiting a long position that may have been established 5 weeks ago when we had the buy signal above 149.76, but you may have been setting a short position, reversing and playing short. We've mentioned that many times as a play that is valid. And if that is you want to see this market at the very least close below 179.18 and ideally below 177.41. And if we also then close today, below 175.93, which is yesterday's low, that is the move high, the low of the high on the daily chart anyway, then better yet for those of you who are short right now. Ultimately anticipating over the next 3 to 5 weeks, 157.48, possibly sooner, and over the next 2 to 3 months, 149.76, possibly sooner. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. We put out 2 stock picks this week. Thursday was J Frog. Tuesday was, I forget, it doesn't really matter. You can go to wickedstocks.com and see for yourself. There's a handful of stock picks we put out over the last 3 or 4 weeks that are still pending. And those that activated have played out nicely. We've got a really strong batting average here as so far into through the third quarter. The second quarter was great. First quarter, not so great. But I don't have the exact number in front of me. But you want to check us out. Go to wickedstocks.com. Take advantage of our 5-day free trial. You'll also get our daily chart Triple Q Daily SPY analysis, our weekly Apple stock, our weekly S&P 500, and our weekly NASDAQ 100 analysis. And you can see it all for free for 5 days by going to wickedstocks.com. I'll be back Monday with Monday's NVIDIA report. Of course, I just want to mention also that starting after Labor Day, we go back to our regular hours, which is to say that the daily NVIDIA report will be delivered within about an hour to an hour and a half of the closing bell, as we've been doing for years. We were just doing kind of a summer hours thing because of the different time zones that we're operating from. But yes, just so you know, we go back to our normal hours after Labor Day. You have a great weekend.